Take a look at your market news now. The dollar held firm today after Wall Street shot to record peaks overnight amid signs of progress on U.S. tax cuts. Bitcoin topped $10,000 on a host of exchanges as the frenzy for cryptocurrencies showed no sign of fading. Asian share markets were not as jubilant, with some checked by the caution over the latest missile test by North Korea and concerns at recent softness in Chinese shares. Japanese stocks rose as banks and financial shares tracked their U.S. counterparts higher, shrugging off the North Korean missile launch. The Nikkei ended up 0.5% higher. Hong Kong shares ended the day lower, with investors' risk appetite curbed by North Korea's latest missile test. The Hang Seng Index lost almost 0.2%. Shanghai stocks reversed early losses to end firmer, bolstered by a surge in property shares and resource firms. The Shanghai Composite Index gained 0.1%. Wall Street surged to record highs yesterday, led by sharp gains in bank stocks. The market was also boosted by progress for a tax cut bill, strong consumer confidence data, as well as encouraging comments from President Donald Trump's nominee to lead the Federal Reserve, Jerome Powell. The Dow Jones Industrial Average rose by 1.0%. The S&P 500 gained 0.9%, and the Nasdaq Composite Index added 0.5%. For more on the markets, we cross to the Johannesburg Stock Exchange. Nompumelelo Siziba is standing by. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, global markets are broadly in positive territory, and of course this includes the all-share index, which has been doing quite nicely, with financial counters doing quite nicely relative to other sectors. Meanwhile, there's talk that traders are betting that the South African rand is going to improve towards the end of December, as they bet that Cyril Ramaphosa will win the ANC presidential elective conference. We have to wait and see, because we do know that market players do get it terribly wrong when they bet on certain outcomes, and of course their trades have to be unwound in a very negative way. So we have to wait and see whether that transpires, of course. Let's take a look at the indicators. Well, I'm joined by Makwe Masilela. He's from BP Bernstein. Thanks for joining us, sir.
Thank you.
Let's start with the United States. U.S. consumer confidence surged to a 17-year high this month, while house prices are also said to be rising. And the soon-to-be new U.S. Fed chair, the governor, Jerome Powell, is talking about rate hikes for 2018. So when we see that picture, what does this mean for emerging markets?
You know, two things. That emerging markets, chances are, we know we've been giving good returns. We know that we've been riding on this whole thing that there's cheaper money to be made back home here. So, but the minute you see the U.S. economy doing so well, the minute you see the dollar strengthening, then chances are, and interest rates going up that side, then it's much easier for people to start buying what we call the dollar-denominated assets. So the people can put their money back into the dollar, hence we'll see the dollar strengthening, and that will be negative for our currencies. And then as a result, it can also be negative for our markets if we don't continue to offer attractive returns like we used to.
And then, of course, that from a South African perspective, it almost forces the hand of the Reserve Bank to raise interest rates.
By all means, because the rand weakening, that's inflationary in its nature. As South Africa, we're a net importer.
And then let's talk about North Korea. They confirmed that indeed they tested an intercontinental ballistic missile, which can reach the shores of the United States. And yet there hasn't been much movement in the so-called safe haven gold. Does that mean that the markets are not taking this seriously anymore?
I think we are now used to this whole thing. Yes, he gave us almost a 2 months break, but so far nothing serious has happened. And I think what the market have decided to do is that let's focus on the good news. We have good news coming out of the US about the tax reforms. That's what has been pushing the market since November last year. And for them to say that the budget committee managed to approve that it can probably go to the floor on Thursday, that's very positive for the market. And I think that's what the market decided to do and say, you know what, let's wait and see if he really means business, if he's really going to use those missiles for something else. Hence, maybe the market said, okay, we've got better things to do for now.
Okay. And then here locally at home, as I mentioned in my introductory remarks, market players betting on a Cyril Ramaphosa win come December. And of course, as I mentioned, market players can get it very wrong. Your thoughts?
Not a nice thing to say about us, but yes, it does happen that sometimes we get things wrong. But I think investors, business people out there, they've got this whole thing that we've just even seen with yesterday with the release of the R&B Business Confidence Index, that they are hopeful that if Cyril managed to win, then things will be different, things will be more investor and business friendly, for right or wrong reasons that we don't know. But yes, if that doesn't happen, then unfortunately, including the rand, which is continuing to struggle, then unfortunately this whole thing has to be reversed. Then the rand might continue to weaken. And then for the fact that if we think that Moody, they gave us almost 19 days, that takes you up until when we announce the budget. So if it's not Cyril and not coming with the right things that the credit ratings agency would like to hear, then that might also continue to be negative for the rand. So yeah, if it doesn't happen, then yes, the market unfortunately will weaken.
And then I see PIC, which already owns 30% of Lonmin, the platinum miner, is saying that it wants at least 2 seats at the board table. And they say they want to do this in order to better help direct the executive management about how to improve the company's fortunes. We know that there's been a review of the company in terms of making it more efficient and leaner. But the bottom line is that the platinum price just hasn't been where it needs to be. Do you think this company is salvageable? And do you understand where PIC is coming from? Can they make a difference?
They can. Guys, PIC, they're the owners. They own 30%. They've got the right to decide who needs to run the company. It's only fair. Yes, platinum price, they also has to come to play to make sure that the guy starts making money. But more importantly, as a company, I think Lonmin, they've done a lot, like retrenching, trying to reduce cost here and there. You can only reduce, your employees up until a certain point. They just have to be more creative the way they use their money. I mean, if you really have to ask yourself, how much money have they raised so far? And we thought this is going to help them. But still today we are crying that the guys are not yet up where they're supposed to be. But yes, they still have decent all on there. They just need to get the right strategy to get it right. And it's just simple to make sure that you contain your cost where you can while you're still waiting for the platinum price to come to play as well. So PIC is well right. And I think you can save the company. The question is, when can you do that? But yeah, for the fact that there's something underneath there, I think there's still hope for Lonmin.
And the other issue, PIC saying that Lonmin should move its primary listing to the JSE instead of the London FTSE. Will that make a massive cost difference?
It does, because for them to run in 2 listings, it's a cost to have a London office and a listing that side. And in all fairness, who owns Lonmin now? They own 30%. Where are they making their money from? They're making it back here, back home. So I think it's only fair for them to move the listing, the primary listing, back to Johannesburg.
Okay. Well, thank you for your insights. We've run out of time. That was Makwe Masilela. He's from BP Bernstein, giving us his insights on market developments today. After a short break, Nzinga has more business news for you.